Hey everybody, welcome back. Light volume day to say the least, but what was nice about it is we got above that 45.63. It might not look like much, but I'll take it. We were really struggling with that level and we're finally pushing over it, which is exactly what we were hoping to see. And we can see right here how we are closing right over there, and now we're shooting for up here. And I don't think we're going to see that on Friday, but you never know. Remember guys, Friday, very light volume day. We close early as well, and then you're going into the weekend. So you really won't see that much action, but I do think there's some important things to note. The fact that you were able to get over that level is pretty significant. And now we're really shooting for up here. Now let's take a look at this on the hourly. Now if we look at Monday's level, and we look at this high right in here, we were just unable to get over anything. And that's exactly what we're watching. So we're watching this 45.72, and we're watching this little bar that happened here on Monday, and we're watching our inability to get over that level. And I think that's really important. So this is the level that I will be watching. Now, if we come here and just look at this other wick that was standing right here, we get that 42.50 level. So these are both key levels that we are now boxed in, and we can see that really clearly there. Let's get an arrow. You can see that right there, and we can see here. So we are boxed in. Now, we have been boxed in before, and what usually happens with these boxes when we get boxed in is we just stair step up and go to the next one. I don't know that we're going to get something like that. Maybe we'll talk about that over the weekend, how we're going to get there. But we have to look at this, and it is what it is. If we look at the NQ, well, you're knocking on the door a lot louder. You're constantly hitting this level over and over again, and that's exactly what we're looking for. You're always looking to see, are you staying up here? And then when you're there, are you staying there? And the answer is yes. So you're constantly pushing against this level, and we should all know this level fairly well. But here we are in the 4 hour. And again, if we just look at this, it is very clear what's happening here. It is not rocket science. You're just literally stair stepping across. Right here, you can see the little lift, and then there's your rise, and then there's the run. Rise, run, over and over again. So we're waiting for this. That maybe leads to breaking out in there. That's on the 4 hour. Take a look at this on the daily, and it doesn't really get much cleaner, guys. And people are saying, well, we've come so far so fast. Well, this has been your base since June. So what have you really done? I know we're going to say it's 7 stocks again, but what have you really done? You broke down, you undercut. Now you're going to try to put in that, quote, double bottom, even though people won't call it that. But that's really what you're doing. And if you come across, then you're setting up for this. So are we on this major bull run? So far, really what we're doing is consolidating since about this spike that we had in July, and we're going across. So we're not really seeing this, quote, consolidation that we keep hearing about, are we? And I think that's really important for us to digest. We're not getting this consolidation that we keep hearing about. So let's keep that in mind, or that breakout that we keep hearing about. Did we have a huge run? Yeah, we had a huge run. I don't need moving averages because we can see what we're doing, and we're going to spend more time with other things. But we've consolidated. And then, okay, so we've come up. We know why we've come up, because they're not raising rates anymore. We have the island reversal. We've been talking about this. We can see what's happening here. It's getting uglier and uglier for people that are trying to get that higher yield. Those days are over. We've broken 13 here on the VIX. Now, I do want to talk about this. I do think there's something here, and I do think that we should just be aware. Every single time we've gotten here, we've seen some kind of sell-off. So every single time right in this range, I keep forgetting to hit that arrow. Every single time, and I thank you for your comments to not edit, to just keep going, and I appreciate that. It does make me go a little faster and get more data to you, and we have to go through NVDA, of course, and a bunch of other names. But I would watch this. Can we break it? Of course we could. We could break it. We could head to 10. That absolutely could happen. Do we have a change in macro environments, as we like to talk about? And when we look at this macro environment, we always go macro, fundamentals, technicals, and then we have our stool. But when we think like that, yeah, you had a major change here. And that change is making people de-risk. So therefore, if we were going to break, it would be a macro event that would shift the technicals. Technicals don't shift the macro. The tail doesn't wag the dog, even though there's 3 legs to the stool. So we think about it that way. Could we? Yep. But we need to be aware of what's happened here. And every single time this has happened, we've gotten some kind of sell-off. So we just want to be cognizant of that and go forward knowing that. And we should really also talk about the sectors that moved today, because we would think it'd be semis that would be breaking out because of NVIDIA crushing, but NVIDIA had some issues there. And XLC, we can see how this is going, but you're hitting highs today. And I think this is really important. You're hitting all-time, well, I shouldn't say all-time, but you're hitting all-time highs for 2023. And no one's really talking about this. Are you all the way back? No, you're not. That's why I clarified the statement. It's 2023 highs on the year. No one's really talking about that. XLK's there. We already know that, but it didn't close at highs today. So are we seeing a shift? Well, one way to always determine if we're seeing a shift is to use this methodology. This will show us today, and what we do is we overlay the XLK with the XLC, and then you can see which one had the momentum today. You can see that XLC was up 80 basis points and we were up 49 basis points on the day. And it's always helpful to just put the SPY in there and say, okay, well, how was that in regards to it? And the SPY, of course, underperformed them both, but more in line with Apple and Microsoft, where we have the Metas and the Googles breaking out. And I think that's a very important distinction and something that we should be paying attention to for sure. So this is just a really easy way to sort. You can always do this by the hour. Doesn't really matter how you do it, but it does tell you how things are going. So you can kind of see, if you went back and say, okay, well, how we do since September, which one's really winning? You would see, well, XLK is still outperforming. And you just go back to October, you can see the pull away there. And then we just go to November and say, how's that doing? And again, it's still outperforming it. But when we start drilling into these smaller days, maybe we're starting to see some kind of shift, and we're certainly seeing that today. But are we really seeing that? Yeah, if we go back from the 20th, we are starting to see that. If we go back to the 17th, 16th, yeah, we are starting to see that. If we go back and let's just say we go to the 15th and look, past 2 weeks, what's outperforming? The XLK or XLC clearly is. So this lets you know where you should be placing your chips and how you should be making your bets. But we should spend some time on NVIDIA because it was a lot of fun today. Now we're going to just zoom in right here and we can just see the bar, and then we're going to drill into the trades that we did today with it. I think it's important to understand a couple things. Long term, this was great. It was a great quarter. I can't see anybody really having a problem with it, except it didn't beat by the most that it's ever beat for before, but it still crushed all expectations. We went over it last night. We sold down. We saw that selling down. What does this mean long term? If you read through some of the notes, and we will get into this extensively on Saturday, but if you get into some of these notes, you'll see that ARM is a clear beneficiary of what NVIDIA said, and that's why ARM was acting the way that it is. So this should definitely be on the radar. Intel did not do or fare well during the NVIDIA call, and that's why you're seeing it act the way that it is. And AMD was pretty much a net neutral in between both, and that did fairly well too. But if we take a look here and we look at the stocks, we really couldn't get out of our own way today. We had a nice trade in the XOL early in the day, and then it just kind of fell apart. Let's drill into that so you can see it. But right off the rip, we just got in, let it trade, and then we just were measuring it off, and we could see that we had an issue, and so we just scaled out of it if it was a day trade and just pulled the money out and moved on and got out of the way. Now, with NVIDIA and how to trade this today was kind of interesting, and please comment on what I'm about to say, because if there is an interest in it, I'm going to do a video on it. So what we were doing today was just obviously monitoring it, and we could see it pop over on a 5-minute chart, and we obviously wanted to drill into this on a 1-minute chart when we started the day. And what we're seeing here is we're seeing that pop over, and we knew where this resistance was because we were also using the post-market data. But for time's sake, I'm not going to get into all that. What we did was we just did the simplest of things to start and just say, okay, what are institutions doing? And we could just see very clearly we reject. You get a doji on a resistance line. Like, it's really hard to ask for more. At this point, I was still very net long, even my additions from last night. And then when you broke the doji, it kind of gave me a not so warm and fuzzy feeling, get the lower bar. But I wanted it to break because I didn't want to play around with it all day because it was just way too volatile. I wanted some kind of confirmation that it was going to break. And then we got it. And we could see the breakdown closing below the VWAP. And then by the time we got down to here, I closed what I bought after hours. I still had a bunch of 490 puts on it. So I actually started to make money and be net short as it dropped. So there's hedging strategies here, guys. And I was hedged pretty heavily, fully hedged going into the trade. So actually, as it dropped, I actually become more and more net short on the trade, which allows me to profit. But there were a couple times in here that it looked like we were going to finally find that bottom. That 482 is always a really important level for us right in here. And it looked like we were going to hold. So we start playing the game. We start looking for the bounces. We start getting one here. We get this wick over the undercut and the bounce. So then I try the wick. Doesn't work. Rejection. Try up here. Doesn't work. Once this kicked in and we started having issues like that, it became very clear that we were going to have some problems, right? And then you have the rolling over, and then you're trying to get through, and then you finally get through here. And when we get through here, we start going net long. So now I'm long the position. When I got net long into here, right? And so you start seeing these wicks, and wicks are price rejection. So you're pulling out money on the puts that you were net short on the way down. Please comment on this if you want me to go into more detail about how I did this. And then when we started getting up in here, well, I tried a long here, didn't work, got matumboed, lost $1. tried again, and I was very clear in the room. I said, I'm going to just marry puts to it. I'm not going to play with this thing all day. I'm just going to marry puts to it. So I married puts to the trade here, meaning you're putting the cost of the puts into the cost of the stock. Once I did this, it allowed me to not have to worry about this nonsense anymore. I could quantify how much I could lose by calculating out the put value and also by calculating the put value and adding that to the cost basis of the stock. So I think at this point it was like $4.50, $5. So you know what you're in at, and that allows you to also quantify your risk. And then as it trades up, you can make decisions. Gets to VWAP, you want to pull something out, you can. And what you're doing is you're getting net short as you're pulling money out as it's going up, right? If you're pulling out. So as this would trade up, we would just watch it, and then we would just very simply pull money out of it. And then we would just get to certain levels, and we're like, okay, well, we've seen enough. And then once we start breaking these lower lows, you're getting out of the trade. And I actually posted this, I think, in the room. So I posted this in the room, and I actually even put this on Twitter after the fact, about like a half hour later. But this was support, and then what we were looking is that support going to be that particular level. If you watch last night's video, I will link last night's video at the end of this. Why am I going to do that? Because it's really very important. And the reason that it's important is the fact that you're in a position here where the max pain was 477. You went right to max pain today. 477.50 was max pain. And you went directly to it, and you did not, you just bounced right off of it. You did not go through it. Comes back up, I'm showing on a 5-minute chart where I buy it, marry puts to it, because I got sick of just getting flim-flammed, gets the potential resistance, and you're pulling money out. And then at this point, you have a free trade on. So at this point, what you're doing is you're just pulling money out of the trade. You go back over again, and it looked like it was going to go. At that point, I was really out of a decent chunk of it. But what it does is it actually gives you like right in here, and what it's doing is it's actually giving you the opportunity to put on what I refer to as a free trade, because you already pulled the money out. You married the puts to the cost. So let's say you're in at 481 or 42 is where we were. If I pay 4, I'm in at 486, 4.5. Let's say I paid 5, I'm in at 487. If I'm pulling money out at 90, 92, I'm making $3, $5 net on the entire position, because you're marrying the cost to the put, right? And then when it starts to drop, well, then you just start making money on the puts on the way down. Now, whether or not you close the puts or don't, that's up to you. I don't really want to be net short, but it's a free trade, and who knows what really happens on Friday. So that's how I look at it. If that was helpful, let me know. And I'm more than happy to go over it. Now, on Friday, you're going to have some volatility. You're not going to have a tremendous amount of volatility after the first hour. Just be aware of that. So there's not really a tremendous amount that's going to happen after that first hour. I would say that this trade was fascinating, and a lot of people did exceptional with this today, probably better than I did, candidly. But I'm not a big fan of trading USO. I did trade some crude, but it's just a little too wonky for me. But once Saudi Arabia moved the OPEC meeting, we're thinking that they moved the OPEC meeting because of Argentina and that there might be more oil coming on the market. And what we're thinking is they were not happy with the cuts. People took this as weakness, and I don't know that it was weakness. So they moved it to the 30th. Be aware of this. And then you start to see how we're trading a little bit higher. A bunch of other names that I've gone over recently. On Saturday, I went through one sector. I'm always asked in the comments to follow up on those sectors and what we're seeing. You're starting to see these names start to move. You're starting to see all these coal names that we were talking about. They're all starting to move again. They're all starting to break out very quietly. No one's really paying attention to them. Happy Thanksgiving. That's it.